And big banks earnings continue to roll in with Morgan Stanley and Goldman Sachs, both reporting this morning. Goldman Sachs posting a huge miss on profit due to a sharp drop in revenue from its asset and wealth management segments, as well as higher credit provisions and steeper operating costs. And just taking a look at some of the what came out of Goldman Sachs this morning, Brad. Just looking at, first off, the stock reaction, because we are seeing the stock that's lower as opposed to Morgan Stanley, which the stock was higher. But taking a look under the hood at what they talked about, their return on equity that was hit by it came in at 10.2%. For 2022 and 4.4% for the quarter, falling below a target of 14 to 16%. And something else that we just want to note also when it comes to Morgan Stanley, for example, we are seeing with equity underwriting, that was down for the third quarter, which obviously was not great. Actually, this is Goldman Sachs, by the way, that I'm still talking about. And also, just looking at some of the commentary from analysts, these results were widely expected to be awful. Goldman Sachs' fourth quarter results were even more miserable than anticipated. That's according to one analyst. The problem that he saw was that expenses shot up 11% while revenue tumbled.
Yeah, it's really some of the divisions. And as you were breaking down kind of the results for each of them, I'll start with Goldman here because they noted global banking and markets, $6.52 billion for the quarter. And that was 14% lower than the fourth quarter of 2021. If there's anything that you're looking at across both of these banks here is that they did see, especially in the investment banking divisions, some of those year-over-year declines. Investment banking actually over at Goldman Sachs, that was down 48% versus the strong fourth quarter of 2021, which they noted. And so even within that, you think about Goldman Sachs and what they saw in those particular divisions that were lower year-over-year, then pair that with what we saw from Morgan Stanley's earnings that came out. And Morgan Stanley, even in all of those segments that they were reporting for, investment banking, once again, common denominator, that was down in revenue, at least by about 49% from a year ago. Equity net revenues, they were down by about 24% from a year ago. But if you're looking for a bright spot, that came in the form of fixed income. Those net revenues were up by about 15% versus last year. Last year, of course, 2022, a strong period for fixed income. But then additionally, you think about what the wealth management looked like. And wealth management actually saw one of its best quarters ever for Morgan Stanley. So we'll continue to watch both of these companies going into the opening cross here, but seeing some differing reaction, at least with about 21 minutes until the start of trade.